Hey guys, I hope that we're good. So today we're going to go through the previous week, so the week just gone of trading Euro USD using my strategy. Now, I was away from Monday, Tuesday, Wednesday, hardly traded yesterday, and just literally scalping today. So we've just had the red news event happen. It's 2:30 now, so I'm not too familiar with the charts this week, so I'm purely just going to be taking trades based on the strategy. We'll see how we get on. I did miss a couple of trades at the start of the week. Really frustratingly, I removed an order. I've removed two orders actually, which went off to what would be winners. Just want to give a quick shout out to a couple of guys in the Discord group. Two people now are triple funded with different what they called like brokers. One is triple funded with FTMO, and one is triple funded across different accounts, which is incredible. Everybody in the group now is getting to a level where we're all looking at the exact same things. We're looking at pretty much the same trades. There's a few people use different currencies and different, like they use indices and all sorts, but everybody's going on the same wavelength. So just quickly, if you have filled out the form below, which is like an application form to FTR, into the trading group, and you haven't received an email from me, just drop me a comment, okay? So I think that I screwed up my email sending. I think I'm hitting people's spam boxes. So do check your spam. I'd usually send out the emails on a Monday, Tuesday, Wednesday, and a Thursday. So if you have filled out the form and you haven't heard back from me, please do just drop me a message and I'll reach out again, okay? The links within those emails are only valid for a week, okay? So I do want you to come in if you want to join. So let's get stuck in with the week. Going to get rid of my face because I don't want to see it throughout the whole video. Let's just get going. Right, so let's just go over where we are. Just going to make sure we're in the right place. Yeah, so started on, well, Sunday, but move down, chalk up on the daily, which is good. So we got the break of structure. Well, we got the chop structure there. We also got a continued break up here, which is good, but it was a wick break, which I didn't like the look of. Then we got another wick break right here, and then we finally got a body break. All right, so that means that the daily low is down here. So I'm just going to write on there, daily low, daily high is where we were. We are just about to run into this supply zone or potential supply zone. If you can, well, you can see all these lines on the chart. I'm currently doing another video. It's taken a couple of weeks to put together so far, and the reason for that is I'm still writing down all the data, well, putting it into Google Sheets. Basically, I'm doing something on supply and demand, and I am just challenging the theory of what supply and demand is meant to be, and whether or not it actually causes reversals or just reactions or nothing. But really, I want to be able to capitalize on every single move. So I'm putting together all the stats for that, putting together the video. The video is quite long, so that will be ready soonish. I can't put like a number on it or a date on it, but it should be ready hopefully in December. And yeah, we'll see. But anyway, I had already marked this out basically as a potential reaction point, but not necessarily a reversal. So some of the SMC traders who I hear of, they're expecting price to go like this and start breaking into these lows. And I think that's just a little bit too narrow-minded because we're starting to show very strong bullish signs of reversal back up the chart. And quite frankly, I don't think the chart cares about what's gone on in historical data. Like, yes, we have reversed from something over here like 20 years ago as a potential reaction point. So maybe this isn't going to be a long-term reversal, but in reality, at the moment, we have to pay attention to immediate price action. So I don't like to just be told what is likely going to happen. I need to test it for myself, and I need to forward test it and all sorts. So that's why I am experimenting with these areas up here. Okay, so let's drop down to the H4 and get our charts marked up correctly. We had, don't know what that is. We had a press up. We've had a pullback, so that's the H4 high. That means that the H4 low is here. That's a swing point. And the way which I got to that was there was basically a pullback. We didn't break a new high, so we got a lower high here. So the high on this was 5449. This is 5447. Very, very slight strong pullback, but very slight lower high. And then this one, evidently much lower high, and then a breakthrough there makes this the H4. At the moment, it's this. Oh no, it's not, sorry. Because we have had technically we've had chock here. We've had chock on the H4. So technically right now we're bearish H4, technically, but looking at this recovery, it says that we're most likely not. So yeah, H4 is currently, before the the start of the week, it's currently down. Let's move to the 15. All right, so 15 low is in the same place. If we get a break of that, 15 high is in the same place. So this is the high, this is the low. Let's get going. Right, so market opens, closes the gap. Cool. Get a break of the high, which means that this low is in the correct place. This is the H4. And this is the H4 high. Now, is there anything on here which I think is worthy of sort of catching on? So I like trading pullbacks. So as soon as you don't get a break of the high, oh, I'd left some charting left on before, sorry. So I want to see something like that, just a continuation. But we are approaching a potential supply reversal zone. All right, so just to mark this out, this is the daily. All right, so potential daily reversal area. This is the daily wick, so this is just the wick on the daily, and this is a H4 order block. All right, so as soon as we're within these sorts of zones, I'm looking for potential reversals. So I'm looking for like a chock formation, something like that. All right, and then start looking for shorts, anything which looks like supply coming into the market and short from there. But doesn't mean that it has to happen. Okay, so price can always just run up like this and continue going with continuation. So you basically get a choice with every price movement, every pullback that there is. You either get involved with the first sort of like pullback zone and try and take an order from that. And if you can't take that and price shoots straight through, you're looking at chock, so you're probably going to be looking at a reversal, but only from one of these key points of interest. Okay, so we have the lows there. Have we had any sort of major change? No, on the 15. This is now our low. Not much of a swing though. So that's the 15 low because we've got a little break here. Let's keep going, see what happens. So that 15 low can come off. 15 low is now here. And what time is it? It's 3 in the morning, so nothing to do. I would say set an order off of here because that's perfectly valid. It's a continuation trade. I know that it's running deep into here, but it doesn't mean that there has to be a reaction point. All right, so we've now just technically had chock on the 15. Where was it? Not much of one, and then we get this little break of structure. If we get that break, I'd be happily looking for shorts. So this is now not valid if we were to look to get involved. Why? Because we've already had chock on the 15, and it's a nice bit of price consolidation. It's still pretty early in the morning. I know I wouldn't be awake for this, so we'll just see what happens. There we go. See, 7 AM starts. My trading day would begin. Got a nice inside bar right here, which quite frankly I think is worth an order. So we'd go short from here. So one thing which I'm doing with the FTMO account to make sure that I make space for spreads is I'm setting every order. So I place it exactly like that, but then I literally tap up 6 times. So 1, 2, 3, 4, 5, 6. And the reason for that is I'm literally just sliding my entry and my exit by 0.6 pips because the spreads are quite often 0.4, 0.5 pips on Euro USD when doing the FTMO challenge and whatnot. So I want to make sure that my tap in is exactly where I want it to be because it will show up on TradingView exactly on the line, for example, but on my broker's account it will be slightly higher, and same with getting stopped out. All right, so the reason why I've targeted this is that we've got this sort of breaker structure. Yes, it's with a wick. We got a pullback with the inside bar and then an aggressive move down. So to me, this is essentially just a pullback trade. Get a nice aggressive move down. We get the retail orders going the wrong way. Then we get another move down. Price needs to come up. Release these funds. Continue down. Like that's my theory behind it anyway. Might get a second chance here for another one. In, out, nearly. Oh, sorry, I didn't set targets. I didn't set a target. Right, okay. Sorry. This is going to be in hindsight, but this is literally just following the plan. So because H4 is technically bullish at the moment and M15 is bearish, we can look to target and we're also in what would be classed as, at the moment, the extreme. So if this becomes the reversal point, which we're expecting, this is going to be, technically speaking, the extreme, the furthest point which we can get. So we can target, at least for the time being, the nearest H4 demand coming into the market, or the nearest M15 demand. Now, as we've already gone through and we've swept all of this with that move, taking us down, we could have targeted the low of this, which I wouldn't have done because it was not just too near, it's targeting a new low. We need to target the demand coming into the market. So for me, the target would be right there. All right, so that target being here. Why? Because here's a demand candle pushing up. We got the break from here and we got the continued move. It would be a little bit ambitious, like you can do it. Could be a bit ambitious and target somewhere down here, which looks like it's probably going to be an H4. If it is, we'll go back on the chart. We'll go back a couple of candles just so I don't reveal anything, and we'll just check that. Oh, right, okay, yeah, so this is a huge H4. Don't like it at all. There's nothing in there, so we're just going to have to literally play it by ear. It's going to be here, right? Good start. Oh, could have set an order going along from there as well. But anyway, that doesn't matter. We are now technically bearish on the 15, still bullish on the H4, so we're looking for downward trades only. All right, there is another opportunity here. Not a massive fan of it, but there is another opportunity here, which is right there to get short, possibly just off the wick now. Tell you what, I'll draw this on 6.45 just to keep track of it. 6.45. That is a downward candle. Let me turn off this for a second. Yeah, it doesn't look incredible. Probably go from the wick though. Got a lot of imbalance. Let's watch. If price zigzags back up to here, we'll enter. I was going to say here, yeah, let's end. I'll tell you what. Let's put it on anyway. And the reason why I say that is that we've already had a stronger push down. Price came up. It was two practically inside bars. Nice wick rejection. I'd have probably wanted to have entered from the wick only rather than this body, because that is technically just a downward candle with a load of imbalance. Price came up to it, didn't stagger at all, didn't stutter. You'd be panicking if you were in this trade right now. I'm going to say yes, we enter this just to show you it. And it would have been perfectly valid. That's the thing. It would have been valid if you got involved in it. It just, I know from my trading experience, just not to take a trade like that because it just looks really poor. And now that we've mitigated this, we could look towards the next area, which the target could be here. All right, so the last area of demand coming into the market before the push up. Okay, so looking at 8.19, which is pretty sweet. And then just move it up a bit. 1, 2, 3, 4, 5, 6. All right, so yeah, we'd literally just be tagged in right now. Oh, I was about to say, oh, that's all right. But no, okay, -1 there. Okay, so with that, we had the high. Sorry, I haven't drawn this out. Let me move these out the way briefly. Here's the 15 high. I want to see where we are on the H4 as well. But 15 high is here, 15 low is there. The leg was that. Price came up to about halfway on the leg. We got tapped into it. We also just took profit there, which is cool. Price came down. Strong rejection up. Broke that internal structure technically. We've now got chock. Once we get a body break of this, we will have chock. Just double checking this. Yeah, that's right. So break of structure here to continue down. Bit of a rejection from it, don't like it. Yeah, technically we're going up. So we can look to go long, could go long from this right here actually, but I wouldn't. Reason for that is we've just had a big wick rejection. That's valid at the moment. This looks a lot better. So no to this one, maybe to this one. Ideally, you want to see a break of this high. There we go. Right, so we now have a new high being put in. This is also going to be a new high for the H4. So let's see what time it is, 12:45. We can click 4 more times before checking the H4. All right, so price has rejected this area. We're now deeper into the wick zone on the daily. So on the daily, we're at the extreme. Just got a clear grab of everything above there. The wicks are telling a bit of a story by themselves. By the way, I talk to myself a lot while live trading. So in the mornings now, I'm going through backtesting. I haven't done it this week, but generally speaking, I'll go through backtest what happened overnight, talk myself through the story of price, and then just try to trade it the same way the next day. Yeah, so H4, let's jump onto here. Where are we? Yeah, that horrible candle. I remember that from this week. So wick rejection, nothing is too clear. I remember saying on Monday, just before going out, that nothing was too clear. I wasn't happy to set any orders. There were valid trades, but I didn't like anything. There is a valid trade down here. And there's potentially this as well, which is what we came from there. Can close that out. And I'll get that off the chart as well. I'll just try and keep it a little bit more tidy as we're going through. So we got internally right there, that was the low. Break the high. That's the low to break if we were to get chalk moving down. So anything beyond that, really we're looking at just going down, unless we use this as a demand area to push up. All right, there's a break with a wick, not good. Break for body coming up, better. All right, there's an order that can go on right. Ah, no you can't. Anyway, price is pressing down now. Let's move that out of the way. Similar setup to up there. Gonna highlight this zone. Right, here we are. Let me mark it on my boss. It's another break. This being mitigated by that. This is just a clear run. Don't like it. What time is it anyway? Spread hours, so you wouldn't be trading any of this right now. So we'll just skip forward a few hours. Here we are, into midnight, sort of Asian session. There's a nice order off of here if you can get it. I guess looking back at this, looks all right. Anyway, we're looking for shorts on the M15. Gonna click forward a couple of times, maybe 2 more. Jump over to the H4. So we had technically, I don't know, it doesn't look great. We have had a pullback on the H4, so you could call this the low of the H4, but you're going kind of like the wrong direction. So there was solid structure down here of H4. This is not so solid, but technically are working our way down. And this just looks messy as hell. But if we look at the leg that we're on, this is just like, you could just call it the EQ trade. That one's safer. This one's very safe. This is, well, I'm glad that you didn't mark any of this up. So really we're interested in this, this, and this so far. And if price shoots all the way down, or if it was to shoot all the way down, you'd be targeting something like this as the extreme order block on the 15 to try and target all the way up here. So that would be where you do extreme to extreme. Oh, I was going to say there's a nice trade right there. I've missed that potentially right here. Ah, didn't get a tag anyway. Right, so we've got another breaker structure going down. Because the H4, sorry, I need to come back again. I was away now between sort of Monday midday through till Thursday midday. So not familiar with what's on. Yeah, there was nothing really appealing on the H4 at all. This is mitigated over here. Possible order block or two in here, and then whatever's down here. So yeah, nothing appealing until we get down to here. Right, let's keep going. So we just got to press lower. Hit it. So technically we have a high up here. With a wick, so ignore it. Body looking better. H4 is still down, so you could take this, you could take that, or you can look to go long. Looks like we missed an entry there. There you go, could say that we're in this trade now. Hang on, let me check this. Price is moving down. H4 is now down. Where is it? I've forgotten. Yeah, sort of difficult direction because it wasn't a swing low. It was just technically a break. That's the swing low. So yeah, we're kind of in no man's land. So following the 15 structure, up, down, down, bounce, up, rejected from something, came down a little bit further, just loads of wicks indicating that price wants to go up. This is still valid because it's a lengthy leg. It's the midway point. Let it go long. You can I want to say you can go short from here, but I just don't think I would. Red news as well, which I've forgotten about. I'm going to put that down as -1 because I confused myself. I'm going to keep for this one on as well. That'll be in. Target would be down here. Area of demand. There's M15 chock. You can use, some people do, I don't always. I do in certain places. You can use the inside bar as chock. So once you get a break of that, you can start looking for more shorts. Oh, here we are. Nice inside bar. Look for another entry off of here. If it taps it, we'll take it. Oh, nearly. In. Oh. Well, you'd be panicking a little bit because there is another entry right here, but it looks like bad news. Target can be the same. So if you miss that first one, you could get into the second one. If you did take the first one, I wouldn't recommend taking the second one until you've literally locked in at least 1% of profit to cover your losses. So 2 valid trades here. It's not a swing. This one's been mitigated by that. I wouldn't place an order off of here, although those wicks might do it on a lower time frame. I'm not going to mark it up though. Ooh, bad news for that second trade. So let's just put that down as a -1. Was that the red news? Yeah, probably. I remember seeing it on the chart. I don't remember where it was in the day. Okay, so one of the trades were, you know what? I remember this. So I might have said at the start of the video that I went to enter what? Oh, right, maybe not. I entered one, but I deleted my other. I have a feeling this might be the one which I deleted and I entered that one. Yeah, I think it was that. Yeah, I bit of an unlucky streak this week. So there's 5.1 there. All right, so valid loss, which is fair enough. Valid win. Did we even enter that? Yeah, that was there, wasn't it? Yeah. So far, 1, 2, 3 losses, 2 wins. And I want to check the H. Oh no, I don't need to check the H4 because we know there's nothing there. It's just using these areas. So get a nice continuation. We do have as well. Nearly. Just going to say you could go short from that one as well. But what time is it? Probably wouldn't at this time at night. What's that? So we've got chock within this 15 zone, which is good. Which means we could have got long off of there. If we put it down as a, I'll tell you what, we'll put it down as like a missed trade. Covered a low as well. We'd definitely be in that. So that's targeting the 15. Your next target would be technically at the top. But because we've had chock a couple of times, and it's not, it's not the extreme, so you'd only be targeting this high over here. Well, there'd be 2 highs. This high, which I don't think is far enough, and then that high right there. Let's put it on. I don't know what it will look like. So if you targeted this one, that's 1 to 4.58. Yeah, maybe. Also, it's 3 in the morning, and that formed at 1 in the morning. So in reality, are you going to be up for that? Probably not. We'll take that off, because in reality, no one's going to be awake for it. Just as well. But we do have this all happening again. Break a structure. Let's try to start going long. Or, because we are working our way down, you could enter off of here to continue. But because we're in quite a hefty zone of demand, wouldn't really want to be continuing to go short, because you'd basically be looking at the risk-reward ratio diminishing all the time. So you think, like, where do I take profit? There, there, there. You know, you're running basically against the market. You're swimming upstream. There you go. Would have looked like you get a good reaction, be quite happy for like half an hour, and then, yeah, be taken out. So we've now got chalk again coming upwards. We've got the reaction from here, which is good. So we can start to look to go long. Now, this move down has been mitigated by here. This hasn't been mitigated by anything, but there's no swing below it apart from this. Let's just wait. We've got this body to enter in. Break, which is good. We have a wick though. There we go. This is looking decent. So we can enter off of there. Price comes back to it. Didn't react to anything over here. Price is just sort of doing the same thing. Oh, and it has come into it. All right. I don't know if there was an entry. No, just missed it. I was about to say normally it will come back down with a big doji like that. It normally comes back down and does it again. There you go. You'd be in it, so you can go long here. Just target the high because we're going. Need to double check that H4 again, because I was going to say because we're going pro trend, but I have a feeling that I'm not sure. So let me just go back on the charts a little bit. The reason why I'm doing this, by the way, is just so I don't reveal what happens on the next H4. Okay, so right, quite a few developments which I have missed. So we're now H4 long, so we're going pro trend. This would be our target. All right. The reason why I say we're H4 long is that, yeah, even though this is the pullback on the H4, and we got that minor pullback there, didn't get a swing, so very unsure of which way it's going here, especially with the price reaction on the higher time frame. But we got moved down, break, only a wick break there, move down, move down, move down. And again, similar scenario to up here, we had another doji with the wick there. So again, just very messy. Kind of glad to an extent that I wasn't trading sort of Monday afternoon, Tuesday and Wednesday. Oh no, I was trading Monday. It was Tuesday, Wednesday, Thursday, which I was out. Apologies. So yeah, that's a perfectly valid entry. Let's get back to where we were, which is there in the trade. It's not looking good, is it? This looks decent as well. If you miss that, this looks alright, to be fair. Probably just the wick. And then you've got these down here. So the obvious areas here, but it's been slightly sort of pressed down into. There's actually just beneath it, which is here, but I don't like the fact that it's got extended wicks below it. And then there's obviously here as well. So this is another potential area to go long from, because technically we'd be H4 long on this, and this one is sort of like a reaction point to here. So maybe this, if price comes back to it down to here, it will stop us out of this, but we can technically go long from here because it's H4 technically. The low is down here and the high is up there on the H4. So looks like price has forgiven us. This is all internal structure. By the way, there's been a lot of internal structure the last couple of weeks. Just realized the video is going to be taking ages if I don't hurry up. So that's the, I'm going to double check this. I think that's the H4 high at the moment. H4 high, H4 low, I think is down here. So anything here is internal, right? So price came up low to the high, price pulled back, came up again. The internal structure is now between here and here. Price came down, tapped the furthest most internal structure to go long again. You can hold this one to either here or up here. Conservatively, you say it's there. So if price comes back down again, taps into this, your target is going to be either here or up there. Really, it should be the H4 high. Okay, so, but you can go conservative and target the M15 high. Oh, right, well, you'd now definitely be in this one. Oh, did I say something about the wicks? What did I say about those wicks? Either way, a wick tap in. Oh, never mind. Looks like it's going to go bad. Notice how it's reacting to the wicks rather than the bodies. We're still in this trade from over here, by the way. Yeah, is that profit? No. Yay! Right, we got there. All right. That didn't require a celebration for me. That was just good to see. 6.69. All right, good. So where are we over here? We've reacted to this. We also have farmost point. That's the daily high. Was this the previous high? Oh, it was just this one. Right, okay. So now we can check if we break this, or we can take that long. So realistically, oh, there's plenty of trades which I've missed out on here. Oh, well, if you know the strategy by now, you'll be just shouting at your screen saying you've missed this and you've missed this, but I'm just doing it from how I do it personally. You do technically have another long there, which, to be fair, I would take, but I would only take this one from the wick, and the reason for that is that we've just broken this internal high. We're working our way up to here, so maybe this is the target. But in reality, because we've had shock a couple of times, or more than a couple of times, I want to be conservative, so I want to try to target like as close as I can. So let's call it that. 2, 3, 4, 5, 6. And that's good enough. Okay, we're in. It's basically teasing me a little bit like what it does on live trading. And then usually it goes against me. Oh, there we go. Right. So you got a winner there as well. 4.13. Bear in mind what time was that. You'd have ended up taking profit on this around about here by accident, and actually for about 3.5%. So you'd have missed out on 1% here, I think, because the spreads would have kicked in, and the spreads are usually about 6 pips on on your FTMO account. So we'll call that +3, just to be fair. All right, so trimming off just over 1% on that. Our price is working its way up. I would normally drop down here. I know it's 1 o'clock in the morning. Been quite good with my sleeping pattern this week, so earlier nights, which is good. All right, so we get a break. So the low is here. Wick break, which I never like the look of. Followed by another wick break, followed by another one. So lowest point there. Once this goes short from there. Didn't have to wait for too long. But another wick break. So instead of getting short from this inside bar, I just wouldn't, because price has already come straight back into that zone. This is practically the Asia session condensed. So when was that? I should have noticed that this morning, you know. I don't remember any of this price action, which is ridiculous. I was away for 3 days, to be fair, but I don't remember this morning. Oh well. There is another potential entry off of that white one. Technically there is. It should have been before this last candle was printed, but that's an entry right there. There we go. Evidently I didn't take that today. Missed a couple. Which is what happens on live trading, by the way. You do miss quite a few. Right, targets. That's mitigated this. You want to find one which hasn't been mitigated, so the top of this candle, realistically. Or maybe even here. So you could say there, which is actually just below where this came to, but right there. Okay, so there's one target. Wow. Oh, that was a news event. That's just happened. Okay. Right, okay. Yeah, that's frustrating, because I wasn't in that. Yeah, really frustrating. And I did try to trade that news event on the 1 minute. Anyway, so that would have been a target hit right there. And quite frankly, the strategy doesn't care about whether or not you're in red news. So yeah, there's another one, 5.74. All right, just to round it up, because that was valid. I'm quite annoyed that I wasn't in that trade today. I did get into a long. I think I got into a long right here, literally off the wicks. Sure that I did. I got 8R, so I did get 8% this morning. Yeah, I could try and find that actually. It must have been here. It was literally just picture perfect. It was a complete sniper entry, and it was only from there to about there. But still, it was an 8R trade. Nonetheless, anyway, that's the end of this. Oh no, it's not, because price has moved on since, so it'd be interesting to see what has happened. Not much. It's come up, grab liquidity from here. So, not so clean. But yeah, this is live price right now. So let's tally this up and see how we did. Overall, there were quite a few trades to take this week. 1, 2, 3, 4, 5, 6, 7, 8. 8 trades. Probably a few more as well, which I'm likely to have missed. I'm not going to go back over it again though. So the losses were 1, 2, 3. Surely there were more losses. 1, 2, 3. Yeah, 3. So the wins, all right, we'll deduct, -3 in a minute. So the wins were 6.3 0.45 plus 5.1 plus 6.69 plus 3, which was the conservative win, plus 5.74. 26.98%. Oh, minus 3. So 23.98%. And if you think that that's not possible, considering the way which even I was butchering this, one of the guys in the group got over 30% this week, and that was from another currency pair. Another chap got over 40%, and yeah, it's all going quite well. So if you stick to the strategy and you stick to the higher time frame bias, now that was a little bit harder, especially because on my actual charts I've got the screen split into 3 pieces. So this right hand side I've got for the 15, 4 hour top left, daily bottom left, and it's generally easier to keep track of. I won't say it's easy, but it's easier. And I remember somewhere around, it must have been here, like I came back on sort of Thursday afternoon, late afternoon, so I was probably only trading this, thinking like, not really sure which direction price is going, because if we jump to the H4 and we clear this off of the screen, it's a little bit choppy, but it is forming a channel. Channels they do matter, depends which direction the overall trend is going, but I was put off this week by that doji. Now I remember that being there, but I couldn't remember, all of this because I wasn't trading it. So yeah, there's the week for us. 23.98%, give or take a few. You just need another win to get, up to like the 30% level, or another 5 losses to be in the, 18% level. So, the strategy is solid. Mathematically, I don't think it can fail. The only way to fail is to do like me and just take your trades off. So, guys, I hope that it's been good. Look, if you like it, please do subscribe. Drop me a comment and I'll get back to you at some point during this week. And if you do want to join us trading, we only trade my style of trading. It's not quite SMC, it's not ICT, and it's not anything else which is anything to do with like SMC. It's just literally mathematical based trading. Okay, and this is from 4.5 years of jamming down probably around about 12,000 trades, about 9,000 of them being live trades as well. So yeah, hopefully this has been a decent video. Sorry again that it's really long. It should have been a little bit quicker. But yeah, any questions? Ask.